When you think about ETFs, it's usually been plain vanilla access to major indices, to certain sectors of the market or certain themes. Those parts of the market are pretty saturated by now. So with a single trade, you're essentially able to, go bullish or bearish on individual equities, on entire indices, or even commodities. So we started launching products like 3 times leveraged Tesla, 3 times leveraged Nvidia.
월가워즈 시청자 여러분 안녕하세요. 오늘 저희가 이렇게 아주 특별한 특집 기획으로 찾아뵙게 됐습니다. 전 세계 최대 혹은 유럽 최대의 ETF 발행사입니다. 레버리지 쉐어의 전무님 옥타이 카브락 Cfa를 모시고 오늘 ETF 시장에 대해서 다양한 인사이트를 얻어보도록 하고요. 특히나 국내 서학개미 분들께서 이 레버리지 투자를 굉장히 선호하시는 경향이 있잖아요. 레버리지 투자에 대한 여러 인사이트들 여쭙도록 하겠습니다. Hello, 옥타이.
Hello.
It's great to have you in Korea.
Thank you so much for inviting me.
I heard that it's your first time doing an interview in Korea during this trip. Is that
Yes,
right?
yes, that is correct. We did arrive just last night, so I'm really happy that this is my first interview here.
All right. Well, thank you very much for stopping by our studio. So first of all, before we get into all the market talk, would you like to introduce yourself and your company?
Yes, absolutely. So I'm a director at Leverage Shares. We are the first ever issuer of what are called single stock ETPs.
Okay.
So this is essentially a new corner of the ETF market where we offer leveraged access packaged into an individual wrapper where you can get access to single stocks, individual commodities, and we've now expanded the range to now include over 150 products across different asset classes and basically every type of access that investors are looking for. We've been doing this for over 6 years now and looking forward to bringing a lot more products to market.
All right, interesting and exciting. So I would like to get to know more about your products and what kind of specialty it can bring to Korean retail investors. But first of all, you guys are, as you said, a leading issuer of ETFs in the market. What are some noticeable developments in the ETF market that you guys been catching recently?
So like I mentioned, we sort of created this new category within the entire ETF segment. When you think about ETFs, the first thing that comes to mind is diversification. So what we offer is almost the complete opposite. So with a single trade, you're essentially able to, go bullish or bearish on individual equities, on entire indices, or even commodities. So some of the first products that we launched were relatively less volatile names, and over time, based on feedback that we got from investors, from other institutional sort of counterparties, was that they're looking for exposure to the more popular tech names. So we started launching products like 3 times leveraged Tesla, 3 times leveraged Nvidia.
Koreans love them.
Yes. And over time, we sort of built out a suite of very wide offerings that basically cater to individual investors. The ETF market overall is expected to surpass $20 trillion over the next few years. And this is probably the biggest innovation within the asset management industry for this side of the century. It's been growing year over year at over 15%, and the single stock category, which in the US didn't exist before 2022, is now at over $40 billion in AUM. Some of the more recent offerings that we've launched are what are called income options ETFs. So essentially what those offer is monthly cash flow. Yeah. What we do at the fund level is we sell options, so it can be call options or put options, and we harvest those premiums, which are then paid out to the end investors every single month. So what that means is that investors can expect high monthly cash flow without having to invest in just fixed income or dividend paying stocks. And what we've seen over the years is that it's not just the institutional appetite that's driving what ETF issuers are bringing to market. More and more issuers nowadays are trying to appeal to the retail investor, because what we've seen in the past is that it's been the latter that has been able to capture some of the next themes in the market even before the institutional guys.
Really?
And I'm thinking AI, EVs, and even crypto. So I think it's been the ETF wrapper that's brought this sort of exposure to the institutional players. But even before that, we all know that it was the individual investor that was already, having access through other means.
So that is why there is a growing importance in you guys also paying attention to what the retail investors are paying attention to, because although they have a relatively smaller trade volume, they are very keen at catching the trend in advance.
Yes, absolutely. So like I said, when you think about ETFs, it's usually been plain vanilla access to major indices, to certain sectors of the market or certain themes. So those parts of the market are pretty saturated by now. And what retail investors have sort of driven within the overall market environment has been, the need for exposure to more niche offerings, to things they may or may not be able to do themselves. And what do I mean by that? So nowadays, it's very easy to trade, let's say, the NASDAQ 100, S&P 500, etc. What's not so easy is being able to trade options and being able to manage options positions, because that involves a lot of complexity around dealing with margin accounts. It involves, rolling positions. It involves, understanding things like the Greeks. So what we try to do at Leverage Shares in general is basically package and bring convenience to the end investor.
I see.
And when you think about the retail investor overall, although many issuers might still underestimate them as one part of their audience, 50% of ETF trading volumes in the US are driven by retail. And many companies understand that moving forward, if you're not able to cater to the retail audience, then you're basically, going to miss out on a major segment of the overall ETF. So just taking a step back, maybe I can just give some background on how the idea came to market.
Okay.
So Leverage Shares, we were, founded around the idea of bringing sort of innovative exposures to clients that they weren't able to access before. So we did that within the leverage single stock space. And we thought the income space was sort of the next frontier. So about a year and a half ago, we launched what's called Income Shares. And essentially what we're doing is, like I mentioned, we sell options at the fund level, which offer multiple things. First of all, you're sort of limiting the volatility of your holdings. You're getting monthly cash flow. And also you're being able to manage a portion of the portfolio, which provides an alternative means of getting yield from your portfolio.
Yeah.
So what that means is, instead of being fully invested in growth names like Tesla, Nvidia, MicroStrategy, etc., you can still get access to those companies, but at the same time, benefit from them as if they were high dividend paying stocks. So the way that's done is through what's called covered calls.
I see.
So we can either buy the individual security and sell call options against it. And the other sort of strategy that we run is called a cash secured put. So essentially what we're doing is we're holding cash and we are selling put options. So both of those strategies have sort of their main benefits and maybe some downsides. But essentially what you're trading is capturing the full upside, and in return, you're basically able to turn market volatility into monthly income. And that's been one of the fastest growing corners of the ETF market.
Amazing. 인컴셰어즈 ETF 상품을 출시했다라고 말씀을 해주셨는데, 특정 주식을 회사가 직접 매수하고 단기 콜옵션을 매도, 그리고 그렇게 해서 번 돈을 투자자들은 매달 월급처럼 소득으로 벌어들일 수 있는 아주 특이한 구조를 가지고 있는 상품이라고 생각하시면 되겠습니다. 이 투자자 입장에서는 예를 들어서 엔비디아나 테슬라 같은 특정 주식의 주가가 아주 많이 오르지는 않더라도 안정적인 소득을 벌 수 있다라는 거고요. 그 대신에 그 수익률은 제한될 수 있다. 이런 장단점을 가지고 있다. 그러니까 조금 더 안정적인 투자를 선호하시는 분들께서는 이 인컴 쉐어즈 상품에도 관심을 가져보시면 좋겠습니다. So you guys also have a lot of leveraged ETF options, and as you may know very well, Koreans, we go hard, we go wild. We really love these leveraged products. So have you been noticing any trends among Korean retail investors, what they favor and what they're going for right now?
Yes, absolutely. I don't think Korean investors are very different from other global active investors. So what we've seen is that a lot of the buying here locally has been in overseas stocks, sort of the same companies that anyone all over the world is interested in. So we see the same sort of high beta names that people are looking after. So it could be like the ones we mentioned earlier, so the big tech names. the wider exposures like the S&P 500. But also what we're seeing is sort of these up-and-coming names. So if you think of tickers like BMNR or, even beat-up names like United Health, what people are essentially looking for is either a stock that's been beat up like UNH or the sort of the AI plays that have maybe not lived up to their full potential just yet. So an interesting thing that I saw in the Korean Securities Depository data is that over 30 of the top 50 holdings were not in individual securities, but in ETFs. So what that tells me is that either they're looking for wide market exposures or they're looking for tactical exposures, whether it's through single stock ETFs, whether it's through other leveraged ETFs, or whether it's through, income options ETFs, which is sort of what we're doing with income shares. So I think the Korean active trader is very similar to what we see not only in Europe, but also in the US.
One major event that investors are awaiting right now is next week's FOMC meeting, and we are broadly expecting the Fed to cut rates. And if there's any strategy that you can advise to our viewers on how to play this rate cut.
So I don't want to suggest any specific strategy, but what I can say based on your conviction is there's sort of three ways to play it. Okay. If you're very aggressive and have a very bullish or bearish view on what's going to happen, what you might consider are leveraged or inverse ETFs. So essentially, you can take a position for a very short term and you can bet in a single direction. So you can say, I'm very convinced that this is going to lead to downside pressure on equities, and you can take an inverse sort of position on broad indices or single stocks or vice versa, play it to the upside. What we see around FOMC is double the volatility of what you see in the S&P 500 on any given day. That type of volatility doesn't sit well with everybody. So my second sort of strategy would be to consider what are called capped accelerated ETFs. Okay. So these types of products sort of came to market in the US, I would say, not too long ago. So it's sort of a combination between a buffer product and a leverage product. So the way that works is not only are you getting leveraged exposure to the upside, but you're essentially getting 1x exposure to the downside. So that's basically...
How great!
It seems a little bit counterintuitive. Of course, there's no free lunch, as we know, in investing. So the upside is capped.
By how much does that differ?
It will differ across different underlying equities and across different months. So the way that's structured is through options strategies. So essentially, you have 4 legs. I mean, we can go into detail later if you'd like to, but essentially what that means is that based on the volatility and the overall market environment, you might get more upside in a single stock in a given month, and in the next month it might be kind of lower. So just to give you an example, let's say in any particular month, if the cap was 15%, and let's say Tesla stock was up 6%, you'd be able to capture double that, which is 12%, because you are beneath the cap. But if Tesla were to rise 20%, then you would still be capped at 15%. I see. But on the downside, the benefit is that if Tesla were to drop, let's say 7%, you would only lose 7%. You wouldn't double the loss. So this is it's a bullish strategy, but it's not as aggressive as leveraged ETFs.
This is very interesting. It's like a booster rocket with speed limits.
Exactly. That's essentially what it is.
All right.
And my third strategy would be to sort of stay slightly away from direct market participation and basically sell volatility. So you can do that yourself by selling options. So you can say, because there's always elevated volatility around major events. So that can be an FOMC meeting, that can be an earnings release, that can be any major corporate event, basically. And the way to run that is you can either sell the options yourself, manage the risk all on your own, or you might consider some ETFs that do that for you. So you're essentially able to translate that market volatility into cash flow for yourself. So you won't participate in the full upside, but you will be able to benefit from all of the market volatility that's taking place.
Do you think you can give us some examples of which ETF products there are that?
Absolutely. So in the US, there are many options, so from multiple providers. So anytime you hear the term options income ETFs or buffered ETFs, these essentially offer some sort of strategy where you're able to either, capture a part of the upside, and, you're basically giving up the full upside participation, but in return, you're able to sort of mitigate the downside volatility. And then when you talk about income options ETFs, we have, the brand income shares in Europe. Mm-hmm. So the way to play that would be you can essentially buy one of the ETPs that we offer. So what we would do in the background is sell options that are probably about a week out. So if any individual equity were to skyrocket, you would be able to participate slightly in that upside. Okay. But in return, you would be able to capture a lot of cash flow because that sold volatility means premiums for you as the end investor.
And thus, it would be advisable for investors to go very short term with the leverage products, especially. But what about this capped accelerated product? Would it be relatively more okay to hold it for a while?
So what I can say is that the outcome is more predictable if you hold for what's called the full calendar month. Mm-hmm. If you hold a daily leverage ETF for a week or a month or a year, there's essentially almost no direct link between what the underlying did for that full period and what the double or triple leverage ETF did for that cumulative sort of period. With the capped accelerated product, you have a clear defined outcome period, meaning if you were to buy on day one and hold until the last day, you would know exactly what should happen on the capped accelerated ETF versus the underlying. Mm-hmm. So what that means is that you can even hold for a month and you would have this defined outcome, which is very different from a daily leveraged ETF. And that's where the term daily leveraged ETF comes from.
It's very appealing. 보통의 레버리지 상품과는 다르게 이 캡 엑셀러레이트 ETF의 경우에는 단일 종목의 한 달간의 상승률의 최대 2배까지도 내가 수익을 거둘 수 있다라는 특징이 있고요. 그런 반면에 손실이 났을 때에는 1배만 추종합니다. 그러니까 수익 손실폭이 2배까지 확대되지 않는다라는 장점이 있습니다. 내가 어느 정도 공격적인 투자는 하고 싶지만 그래도 일정 부분의 안정성을 가져가고 싶다 하시는 투자자분들께 아주 매력적인 대안이 되지 않을까 싶습니다.